I think, see, on a longer term basis, Berger Paints has got a very large exposure both on the industrial as well as on the residential segment. They have a fairly strong brand in the domestic market. And I think, see, the best part is raw material prices have come down quite significantly. And I think that is going to be a big major booster for margin enhancement in the coming year. Competition has increased. We have seen two new players, that is JSW and Grasim, entering the domestic market. But I think, Berger, which is more of a older player, definitely has the tenacity to compete with the new players. And I think it's unlikely that in the very near term, margin pressure could be significant for a player like Berger. So I think, if the investor has a long-term view, I think he could even chip in at the current levels. And as Kunal pointed out, maybe around 460, 470, if the stock does come down to that level, it's a good opportunity to accumulate because longer term, trajectory for the company looks pretty solid. In the very near term, there could be a small range movement in the stock, depending on how the company reports its first quarter numbers. Purely because I believe the first quarter would be a kind of a pickup quarter, and I think the second half is normally a very robust period for most of the paint companies because it coincides with a lot of festivals and celebrations. So that is the time when volume growth also picks up. So net, I think continue to hold, and even at the current level, one can average for a long term horizon. I think my sense is, I think Poonawalla Finance, which he has purchased, and Patel Engineering, also which he has purchased. These are two counters, I think, which should show significant growth over the next, say, 2 to 3 years. Poonawalla Finance has been aggressively increasing its loan book, has been maintaining decent asset quality. And I think looking at the kind of growth momentum and the tailwinds in the NBFC sector, I would not be surprised that Poonawalla Finance could show a very strong year even for the current year, that is FY25. Patel Engineering is sitting on an order book of almost 4,500 crores. A lot of marquee investors have now entered the stock. The company had recently did a preferential round where it raised fresh money. So my sense is here also, I think if the investor can give at least 12 to 18 months, one can definitely think of holding on. Which was the last share you mentioned? If you could please tell me the name.
He has at 570 rupees per share, Jubilant Ingrevia.
See, here I think my guess is that this company initially when it got listed, I think it was a stock which was arisen out of a demerger. Here, I think the investor has to keep in a slightly longer term view because the company has made a massive capex, but I think yet the operating leverage benefits have not yet got reflected in the top line and the profitability. So here, if the investor can hold on for the next 18 to 24 months, one could definitely look at getting a decent risk reward. Here also the company operates in niche specialty chemicals, and I think here also the risk reward is definitely looking attractive. Only thing is he has to give in a longer time frame. I would say is that at this point of time, although the IT basket has shown a strong momentum, the long term trajectory for IT would improve only once we get better visibility from the US and the European market, which is at least about 3 to 6 months away. So all these three stocks are good. He can continue to hold. No, I think he could continue to hold on to Goodless Kansai Nerolac. See, my sense is here also, if one were to look at the business of Kansai, I think it's an MNC play, a very strong exposure in the industrial automotive segment, very strong customers base. And mostly, the growth is largely come from the OEM sales. So I think, here, if the investor has at least a 12 to 18 month kind of time frame, like all paint companies, the company seems to be quite well positioned. I think one needs to take a longer term view. So definitely Kansai Nerolac can be held on. As far as Bata is concerned, it's been a relative underperformer for the last 2 years. And I think numbers have not been very encouraging. Even the fourth quarter numbers, were not all that great for Bata. My sense is that unless and until, we see some noticeable improvement, especially going forward in the next 1 or 2 quarters, this stock is unlikely to get re-rated in a hurry. The company has got everything going for it, a MNC promoter, a debt-free balance sheet, but unfortunately, volume growth and margin pressure has been significant if you compare it to the other players. So at best, it's a hold. I would say is that another 2 quarters, one needs to review the performance and then take a fresh call. Metal sector is a momentum sector, and Gujarat Fluoro is a well-established chemical player. My sense is that 1 or 2 bad quarters does not make the company bad, and I think the company has a very healthy order book. My sense is that if the investor can give in at least 8 to 12 months, Gujarat Fluoro can easily bounce back. The company's balance sheet is very strong, order book is very healthy, and I think the management is very hopeful that FY25 should be a lot better as compared to last year. So I think probably if the investor can give in a little more time, it's better to hold rather than getting into the metal sector, either a Vedanta or a Hindustan Zinc. Both these counters have seen a significant increase. In fact, Hindustan Zinc has jumped significantly. So I think there the alpha or the incremental upside may be limited. But in case of Gujarat Fluoro, once numbers start coming in, on a positive side, you could see a much bigger kind of a re-rating. And I think it operates largely as a monopoly player in certain product categories. So that I think also becomes a big plus for the stock. So I would suggest continue to hold. Given a time frame of at least 8 to 12 months, I think a risk reward could definitely be much better than the other two companies. Then any rise, Cheryl, should be used as an opportunity to sell off, because clearly in these kind of illiquid counters, when you get stuck up, I think the incremental upside becomes a little more difficult. Liquidity is one of the most important things, when you invest in these small tiny companies. And liquidity, if it is going to be controlled and limited, then I think even the exit becomes a lot tougher. So I think exit, on any rise, that's the head. Z Entertainment, I think if you look at the business structure, it's attractive. But I think after the Sony fiasco, I think the stock has, underperformed quite significantly. My sense is that this could be a contra bet for an investor who can give in at least 1.5 to 2 years, because the business is definitely there. The business model is very strong, but even as of now, there are many balance sheet issues which need to be resolved. And plus, the market is awaiting very strong numbers, from the company. Only once that happens, the stock will get re-rated. The old management has come back, but I think to re-infuse confidence in investors, the market expects a very strong profit and earnings growth trajectory, which I think may take some time. So unless you got at least 1.5 to 2 years, I think it may not sound very good for an investor who wants to take a short to medium term view. So I think if you've got 2 years, you can definitely buy or even hold on to the stock. Otherwise, I think it's not worth buying. I think definitely company has a promising potential. It's got a nice order book also. And I think recently we have been hearing reports that a lot of marquee investors have entered the stock. So I think, if the investor has a long-term view, at least the next 12 to 18 months, one can definitely look at buying a small quantity. But I think keep a long-term view. In the near term, the stock has gone up. So I would say that longer-term prospects are definitely positive. FY25 should be a lot better than last year. I think my guess is, I think, these companies, unless and until the investor has a 2 to 3 year kind of time frame in mind, because most of these stocks are available at, fairly expensive valuations, although the long-term prospects are definitely good. And in these kind of high price stocks, most importantly, you need to understand that these are basically compounders. You cannot generate an alpha in these companies in a very short period of time. So I think unless the investor has a 2 to 3 year kind of time frame and he wants to include them in their portfolio, I think there's no need to buy everything in one shot. One can do a small SIP, and any correction in the market for these stocks should be used to accumulate, and hold on to these positions. But only longer term investors will make money. In the short term, these stocks have moved up quite significantly. So immediate incremental upside seems to be quite limited. But I think you can continue to hold to NCC, because see, I think in all probability, infrastructure, EPC, and construction companies are going to benefit once the new government announces its budget in July. Already the stock has gone up, but I think looking at the kind of order book, the kind of execution the company has been doing, and typically, this company is Andhra Pradesh based. So, a lot of stocks which have have Andhra Pradesh as their base have actually gone up. We have seen stocks like Heritage Foods, Amra Raja Batteries, a lot of Andhra Pradesh companies going up. So, sentiment is definitely positive. Are announced by the government, NCC could be a major beneficiary.